Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's keep up with the gold analysis. So this week price action was relatively narrow on the gold market because market was struggling with the overbought the whole week because, you know, market stands in the overbought, strongly overbought on the weekly. But by the end of the week, with the easing tensions on the tariff subject between the United States and China, and also some relief on the stock market and the bond market, that some positive outlook for the United States economy in general, that has led to starting of downward action on the gold. So currently situation stands difficult because gold market stands at the position which doesn't clarify absolutely whether this major retracement already has started or gold market still could show some upward continuation. On the weekly chart, it has hit one of our XOP targets that we have specified 2 weeks ago, but it keeps untouched the second one. Although it's not as important as the first one, it's a bit smaller, but still it exists. And despite that, we have some bearish signs on the daily chart as well, but there are some things that personally I do not like in terms of the bearish continuation. If you'll take a look at the daily, yes, indeed, what we have completed, or better to say, confirmed bearish diversions finally. So if you remember, we mentioned it. But at the moment where we have mentioned it, the lines have not crossed yet. But here currently you can see that lines are crossed with the MACD, and we have the confirmed bearish divergence with the MACD. We have minor reversal session here because market has created the new top and closed below the lows of the previous session. Trend has turned bearish. Market returns a big down inside of the range of the high wave pattern, and it seems that we should start chance to go short here. Besides, market hits the XOP on the weekly, market stays strongly overbought on the weekly, so the healthy reaction should be here. But there are two things that makes me uncomfortable to take the position right now. First is very slow action. So when the collapse has happened, when the market turns to profit taking position, the situation develops very fast. Recent CFTC data shows that traders do not hurry up with the closing long positions. So the long still stands at the top, the ultimate high around 300,000 contracts. So this is absolute record, or absolute high for gold position. So and in the position, traders keeps these speculative positions. It means that they are not think that this is really major retracement. Conversely, they turns to the profit taking, and here was faster action. Second moment, despite that here you could recognize easily the potential head and shoulders pattern. For example, if market will drop back to the 1495, this will be neckline. Minor head and shoulders could be formed that will trigger downward action and so on. But at the same time, we could argue that market could form the free drive sell. For example, that could be first drive. It's 127 of the first, and market could form the third drive. So take a look at it. This is the first drive, second, and here, for example, market could form the third drive. It stands higher. It's approximately 1565. It's also give the chance to hit the extension on the weekly chart. It is possible because of the way how market shows downward action. As I said, it is too slow. Especially at the starting point, it's not typical. why I'm talking about it is that at the first glance, it seems that it's very attractive trying to anticipate the possible handovers, taking the position at a good price level, and wait when market starts acceleration. But I suggest that this is some trap. So because despite that you could take the position at the worst price, a bit lower, but personally I think that taking the position, for example, on the top of the right arm, it's approximately will be the same area, will be safer, because almost the whole part of your pattern will be in place, rather than trying to anticipate it right here. So, in 2 words speaking, we think that currently we do not have the real background, real scenario for taking medium-term position on a daily chart. So for taking the short position, it would be too early, but taking the long position, it's not very good because market stands at weak level buy, so it's risky. So you could try to trade the gold on the long side on intraday charts. It is possible, but here on a daily, not much to do. So we need more confirmation, more signs in one or other direction, in which direction market will follow. So for example, if we would get the free drive sell, we will have the pattern in place and we could take the action. But currently, not yet. On the intraday chart, situation stands maybe a bit more simple, and there are some setups for trading exist. But if you decide to trade market right now, you should understand the risks. So you need to understand when you're taking the long position, the market stands from reaction to the weak level bond. And any trade will provide greater risk. So you need to stick with some clear patterns at least, just to minimize it. It is not forbidden the trading, but it would be better trying to get better background, better patterns for taking position. I will show you. So on the follow time frame chart, you probably remember this picture we talked about it on Friday. So actually that was the butterfly completion. It was left wing of the butterfly, right wing of the butterfly, 1.7 extension, so I keep it on the chart. By the way, the part of the large butterfly, I could also recognize here the minor butterfly. So this is left wing, right, this is right wing. It's 1618 extension, by the way. It's butterfly. So anyway, market is forming here the guideless triple to buy, but it doesn't provide us the clear setup because it will be triple to butterfly as here, as if it would suggest the drop right now to the downside. That's also will be the free drive buy. At what point we could get the position? On the follow time frame chart, we can't get the answer. Besides, market here also has formed a kind of the reversal candle. So take a look, market creates the new top, compares to this one, close below the lows. So it means that downward action could continue maybe. On the hourly chart, it seems that some bullish setup exists. So that's our picture that we also talked about on Friday. Market has completed A, B, C, D, OP target right at the confidence support area. But on Friday, if you remember, that was the flag pattern here. And I have said that, well, you probably could try to go long, but we have the flag. And this is bearish continuation pattern. You need to get something else. Maybe if butterfly will be formed, you could think about taking the position. And right now, take a look. We have the butterfly. Minor butterfly has been completed. Pullback has happened. It's bullish engulfing pattern. Market stands in a retracement down. So this is a risky setup. Yes, it's very, very risky. But at the same time, take a look at the level of the potential loss that you could get. If we would suggest that you're taking position right now, your stop will be somewhere below 15, 16. So it's very close. $3.5 per contract. It's very tight stop. This is acceptable risk in the current condition, because if market indeed would turn up and starting to form free drive on a daily, this will be perfect entry opportunity. Besides, this level is not broken yet, so if you will take position, for example, here, that will you will be washed out later. That will not be the mistake, because you are acting on the clear patterns, on the clear setups. You have clear trading plan and your risk. So that's the example of the situations that you could stick with if you would like to trade it. If you have the bearish view and like to take the short position, so it means that you should please take the position maybe by stop sell order somewhere below the 1560. If market starts broken here to the downside, it means that it comes to the XOP at 15 even. And your task it will be to catch the failure of this trading setup for taking the position. So that's approximately how you could act. But as I said, any trading right now is very difficult on the intraday charts because market stands in some indecision situation where it could fluctuate around, and it's no decision yet has been made on whether to start the major retracement or we could still keep long positions a bit more. Maybe market will continue move slightly higher for $20 to complete the 1570 target, and that leads to significant volatility on intraday charts. So this choice is up to you whether to trade currently on the gold or not, but definitely you will get the setups, something of that sort, and it is possible, despite that it's a bit more difficult.